We're going to start today with a short presentation from our associate member, Lisa Martinez. She's the community liaison with Hospice of the Valley. I know that she's been there numerous years, and I will let her tell us how many years she's been there. I've known her for quite a few years as well. She's also an AZAHA board member for several years. And if you're from the Phoenix area, I'm sure you know or have heard of Lisa. Lisa, welcome, and please tell us a little bit more about what we refer to as HOV, Hospice of the Valley.
Thank you, Laurel. So appreciate that. Yep, I'm Lisa Martinez with Hospice of the Valley. I have been there 18 years. So I started when I was in elementary school, but it is a wonderful organization. I'm very blessed to work there. I am going to be looking at my notes kind of through the presentation because I have just about 5 minutes and I want to make sure that I don't go over on time. So thank you guys very much for having me today. And as many of you already are aware, Hospice of the Valley is a community-based, not-for-profit agency that has been providing quality end-of-life care to the greater Phoenix area for 45 years this year. Although we specialize in hospice care, I would like to review some of our other programs and services that can support our community for members that may not quite be ready for their hospice journey. One of our programs is called our Outreach Program, and it is designed for chronically ill patients not yet on hospice. This program connects with patients and community. It connects the patients with community resources, education, and assists with healthcare planning. This is a free program to the community. We also have a mobile doctor service called Geriatric Solutions, and they provide personalized in-home care, primary care, for home limited patients. That program is billed through either private insurance or through Medicare. We also offer a senior placement service, which is to help families help their loved ones who have difficulty managing on their own and need supervision. So if a family needs help with placement, we'll assist with that. We help with group homes, assisted livings, and skilled nursing facilities. This is also a no-free program for both families and the communities that we refer to. Our supportive care for dementia program is quite unique. It provides home visits from one of our dementia educators to help serve people caring for a loved one with any type or stage of dementia. The supportive care for dementia program is currently funded by a federal grant, and it is also free of charge to patients and families. And then something that we're very excited about that you guys may not all be aware of is that we have recently opened our Dementia Care and Education Campus, which is located at 44th Street and Indianola in Phoenix. This is an innovative resource providing exceptional care, education, and support in one place. The campus is comprised of an adult day club, a child center, so we have intergenerational enrichment. It has a small assisted living center, and it also has an inpatient hospice unit. But most importantly is it has an education center, which is used to help enhance the quality of life and help families live well with dementia. If you would like a tour of that or anything, please feel free to reach out to me and I'm happy to take you down there and take a peek. The Hospice of the Valley webpage is a wonderful resource for all. We have extensive information on all of our programs and services, as well as educational material you may find helpful. Hospice of the Valley is also very supportive of community education. So if you are in need of education for your community or staff, please feel to reach out and we will get that set up for you. I have included my contact information over in the chat room, so you can easily look at all the different web pages I have attached, and it also has my contact information. Again, please feel to reach out if you have any needs, and thank you for letting me talk about Hospice of the Valley, and enjoy Kirk.
Thank you very much, Lisa, for sharing all your information today. I don't think people know all the multiple facets that are part of HOV, so we appreciate being educated. So now on to our main session. Our featured speaker is Kirk Deems, reverse mortgage specialist for Directors Mortgage. Kirk's mission is to serve seniors and help them stay in their homes as long as possible. He is currently a volunteer and board member of Neighbors Who Care, a Sun Lakes-based nonprofit. He's also been in banking and finance for almost 20 years, including 12 years in commercial and residential mortgage. Kirk will be speaking about how reverse mortgages can be an alternative method for financing in-home care. Kirk, take it away.
Thank you very much, Laurel. Before I get started, I did want to introduce Larry Melton. Larry runs our program out of Portland, and just ask Larry to kind of give an overview of the company and our philosophy from a corporate standpoint.
Yeah, sure. Thanks, Kirk, and thanks everybody for letting us join. Just to give you a little background on our company and how we've gotten into this marketplace helping seniors. Directors Mortgage has been around over 20 years, just serving as a traditional mortgage banking, mortgage lender. About 11 years ago, I joined the company to help develop specifically the reverse mortgage department. And so one of the things I can tell you is that our team, including Kirk and our staff within that department, we are 100% focused on seniors and helping them live a little more comfortably financially through this product. And Kirk's going to go through the product itself, but I just want to let everybody know again that we do specialize working with seniors. So a lot of our business is through referrals of home care providers, attorneys, elder law attorneys, specifically estate planning attorneys, also financial planners and CPAs, as we work together with those professionals to help seniors stretch out their dollars. And the reverse mortgage product is just a tool to help do that. So Kirk's going to go through those. I'm certainly available to answer questions, but Kirk, I'll turn it back over to you and let you go through some more details.
Thanks, Larry. Let me get can everybody see that the homepage there of my presentation on PowerPoint?
I'm not seeing it, Kirk.
Not yet, Kirk. No.
Well, let's try it again. How about that? I think
There. Thank you.
there we go. Absolutely. Okay. Again, appreciate Laurel and I have talked. We've known each other for a bit, and I appreciate the opportunity to talk about reverse mortgages and specifically how it might come into play within in-home care. I'm going to run a little bit through the background in it, run through some scenarios in terms of refinancing, and it is something that's available for purchase. I don't know it'll apply too much here, but I'll spend a minute on that as well. Okay, the reverse mortgage or home equity conversion mortgage, or HECM, is a federally insured program for borrowers age 62 or older, allowing them to access their equity in their home without having to make monthly payments at all, while retaining full ownership of their property. A little bit of the history. The first reverse mortgage was actually over 60 years ago. So the product's been around a long time. The history's been a little varied of it. I think the key thing that helped change things was some of the old information out there about reverse mortgages is when the FHA got involved. And when that happened, the insurance program went into effect in 1988, and a pilot program was put in place. 10 years later, it was expanded throughout the country. 2008, the HECM for purchase was introduced. And again, I mentioned that briefly. The majority of what we're going to discuss today is refinance options and scenarios that might help your clients. And then in 2015, a financial assessment was added. The process is a little bit different on qualifying for a reverse mortgage. It's not the full. If you have a mortgage where you look at FICO scores and debt to income, the assessment is more about residual income. So there are plenty of cases where a senior may not qualify for a forward mortgage, but will for a reverse. In terms of resources, traditionally, what people are looking at is their monthly income, whether they're still working, whether it's a pension, Social Security, checking and savings, the investments that they might have that they could tap into. They may be somewhat liquid in that there might be penalties or taxes for withdrawal. And then normally the real estate is not liquid because if you're not refinancing, you need to sell the property. So I think your clients are probably looking at it more from paying out of these two. If we could be more of service to them, the time to look at the reverse mortgages now before they tap into their income, their savings or investments, and allowing those to stay in place to maximize what they've set aside, tap into that home equity first. And again, the reason to use it, access equity for cash to improve their cash flow, replace their traditional mortgage with by eliminating a monthly payment. Some of the reasons we've looked at, certainly to skip around here a little bit, home repairs and maintenance, paying in-home care, medical bills, or insurance. Those are probably going to be the key things that your client may be looking at, but certainly it's a way to put off the start of taking Social Security. It can be supplemental income. The majority of our clients set up a line of credit, so that's a great way to take some cash up front, but set up that either emergency line of credit or with a plan for using that over time to take care of their in-home care bills and needs. And of course, paying off other debt as well. Some of the myths, and I mentioned that briefly at the start, the bank takes ownership of the home. There's people I hear that say, well, I don't want to do that because I'll get a check for the rest of my life and the bank takes ownership. That's not the case. Your borrowers, your clients will maintain ownership over the life of the program. And it's just like a traditional forward mortgage. And when I say reverse or forward, the traditional mortgage, when I say forward, you will be able to sell it. It's just paying off the reverse mortgage balance that you put in place. They talk about being expensive to obtain. It's really no more expensive than your traditional FHA forward mortgage. It does have the mortgage insurance up front, but the costs are roughly the same. And again, with the fourth item, bank taking ownership, that's not the case. You'll be able to leave it for the kids. And the other myth is that I can't do it because I have a mortgage. You can pay off that current forward mortgage or home equity line with a reverse mortgage. Again, 62 years old to be eligible, at least one borrower. You can have a non-borrowing spouse that's under age 62. It needs to be their primary residence. Again, I talked about the financial assessment, looking at their residual income, minimum income, and credit requirements. We do pull credit just to look at those payments. And since it is an FHA loan, it does have to meet FHA inspection requirements. So it is something where if there's major repairs, that's something that would have to be dealt with to meet that FHA inspection. And again, I'm just going to move right along here. If there's any questions, please feel free to interrupt. Otherwise, I'll just keep rolling through some of the background here. The only requirements that the borrower has is paying their taxes, paying their homeowner's insurance, and maintaining the home. Again, it's not something where they have to make a payment. So that's the nice flexibility about that reverse mortgage that they would take out through a refinance, is they don't have to make that payment unless they want to. Again, the payments are strictly optional. We talked about costs. Again, traditional FHA HUD mortgage, the costs are going to be roughly the same. It's going to have an upfront mortgage insurance premium, underwriting and processing fees. There is going to be an appraisal involved, and there's some counseling as well. I'm going to get a little more into detail on that. Okay, the process that we're looking at, and this would be something after you have a discussion with your client, and that you've decided or you think that they could benefit from that reverse mortgage. And I'll do an initial meeting, certainly in person. If the client would rather do it over a Zoom call, I can do that, but I certainly like to meet with the clients, sit down with them. We have software that we can, in effect, pencil out the best program for them and see what is going to be available to them in terms of money with a cash out, a line of credit, whatever way they go. And I'll cover that a little bit further as we go. There is counseling required. And then the full application process, the funding is about 45 days. It's, again, much like the forward process. We do like to use our partners in terms of the title and escrow because the paperwork is a bit different. The underwriting is a bit different. So we'd like to use our partners to make sure they're familiar with the reverse mortgage process. Again, initial meeting, understand their needs, and if we move far enough, present that proposal to them based on that particular situation. Counseling is required, and which is a good thing, and it's really just to make sure that I've done my job in order to explain to them the benefits of the reverse mortgage and how the program works. It's not counseling to determine if they're competent or anything of that type. It's really just an hour on the phone or in person if they'd like to make sure they understand the reverse mortgage process, the program they're getting into, and then they do get a certificate that we need to start the application process. Just like a traditional forward mortgage, disclosures, legal information, it authorizes us to submit it to underwriting, order an appraisal, pull credit. Again, just getting started. There is no obligation until they do sign those documents. Again, I mentioned we do like to work with our partners, title and escrow, to make sure they're familiar with the process and the different documentation involved, and certainly they're comfortable working with seniors as well. Underwriting, again, is a little bit different since we're looking at more of their residual income and not needing a debt to income ratio. But the underwriting is done in-house, and then loan approval goes from there. And funding to those to your clients, and I'll get a little bit into this beyond of how we can fund and what the options are going to be. Okay, there's several different loan types. We can do a lump sum payment. We can do a monthly payment, whether it's a certain amount of funds for a period of time, what's called a term payment, or a 10-year payment, where they'll get that monthly check the rest of their lives. Also, there's a line of credit. Majority of clients look at an initial lump sum up front and then set up a line of credit. The 60% rule, in order to protect the clients, there is only 60% of whatever the approved value is of the loan that they can take in year one. The rest is going to be available to them in year two going forward. The way the line of credit is set up, it's going to be at a 0.5% above whatever the interest rate is. So it is going to grow over time. And what that allows them to do, if they set that up, is you'll have an initial balance. If it's not touched, it will continue to grow until they need that. Or again, we can do a combination of anything thereof. Okay, first scenario, borrowers, co-borrowers, Bill 74, Gene 70, they own their home free and clear. And these are just numbers that are based on the scenarios at the time. The way the amount of funds is determined is based on where interest rates are and the age of the youngest borrower. So these are for example purposes. Again, we can take a look at a rough situation for your clients, or do that outright proposal. So here they own their home. They have a fixed income of $2,200 a month. Bill has some in-home healthcare needs. He doesn't want to tap into his investment or savings, but the $2,200 a month is not going to meet those needs. And they did decide they wanted to establish a line of credit that may be accessed later as those in-home needs and other needs require. Okay, the HECM, or again, the home equity conversion mortgage, is a reverse mortgage refinance with cash out. Since Jean is the youngest borrower, 70, we use her age for the loan calculation. We do set up a line of credit. The total amount of funds that are available based on the appraised value of the home, based on the interest rate at the time, and Jean's age 70 is $154,000. The 60% rule is in effect, so they could get $92,400 up front, which is, if we look at those numbers, $350,000, that is probably going to be a low number for here in Maricopa County. Maybe more appropriate value around the state, but I think the home values here were going to be higher. So if they had a higher appraised value, again, they would be able to get 60% of whatever that is. So here it's 92.4 for the first 12 months. A higher appraised value would again lead to a higher amount of money that they could pull out. They could take cash at close. Again, in this scenario, Bill did have some healthcare needs, so they probably would take cash at close. They could again use the funds for anything they choose. So they could do that for his healthcare needs. If he had needs in terms of repairs that needed to be done, adding grab bars, any improvements they'd want to make, they could use the cash for that as well. Again, they don't need to make a repayment. They can repay anytime with no penalty. So if they're, in this case, maybe old enough that they're getting some required distributions from their investments, and they still want to use this line of credit, they can use those funds that come out of there to repay this line of credit at any time. Second scenario, Sandra, a single woman. Again, home value 240. Again, Maricopa County, some of the other metropolitan areas would be looking at much higher home values. Current mortgage in this example is $105,000. A payment of $860 a month. The income is just $1,700 a month. She has some healthcare needs as well. We look at the refinance for her, a loan amount, there's $125,000 that nets at close. She can pay off her current mortgage of $105,000, leaves her a balance of $20,000 that she put into a line of credit. So she's eliminated that mortgage payment and also added that line of credit. So she's greatly improved her monthly cash flow. And again, she can direct any of that cash or the line of credit or any combination to be directed toward those needs. I did mention a purchase, so a lot of individuals don't know that you can buy a home with a reverse mortgage. This is something that came into place back in 2008. Probably in the case of your clients were looking at downsizing. We could sell the home to downsize, look for maybe a smaller single level home. Don't want to use all the cash, the proceeds from their sale. They may not qualify for a traditional mortgage because they don't have the income that they once did when they were working, and they don't want a monthly payment that you'd have with a HELOC or a traditional first mortgage. In this case, the value of the home was $500,000. They found a smaller home of $300,000. The down payment required is about $165,000. Again, this is kind of the reverse of the refinance, where instead of getting a percentage based on the value and your age and interest rates, that amount is required down, allowing you to put the remainder that you would be looking at in terms of that refinance calculation onto a reverse mortgage and not have to make a house payment. So you can, instead of just receiving $200,000 from the sale, you're looking at retaining $335,000. So they have $135,000 they could additionally have on hand, again, used for all purposes, in-home care, upgrades to the home, or just set aside to be able to use as a cushion for future needs. Another scenario might be where they sell the home and net 175. They do want to pay cash, but again, don't qualify for traditional loan, don't want to make a payment. It allows you to, again, through the use of that reverse mortgage, increase their purchasing power. So you may have a client where you have a home that's already senior ready, that's a higher value, again, 325. This would allow them to make a sale and purchase a home that already meets their needs. We won't get too much into the selling agreements. Seller can't pay any closing costs. Again, we have a 45-day process to look at in terms of closing a purchase from the day of the paperwork. Again, that's after we've done the original proposal, we've done the counseling, and have the counseling certificate. That's kind of a brief overview there. I wanted to run through, again, what a reverse can do and see that it could be benefits for your clients. Wanted to see if I could answer any specific questions you might have, drill down a little bit more any details. And again, if I miss something, Larry, certainly jump in and we can fill in the blanks.
Yeah, no, that was great, Kirk. I guess the only thing I would add in terms of just how this product gets used is it really just offers our clients a lot of flexibility on how they manage their finances. And for folks that are looking at healthcare costs, in-home healthcare, I've even used this product for clients who are a couple where one person might need to go into some kind of an assisted living facility or memory care. And this is just a way to use some of that home equity in sort of a non-traditional sense. Again, the fact that you can tap into some equity on your home without having to budget for a payment every single month is huge for our clients typically. Again, a lot of retirees are living on relatively modest funds, whether it's Social Security or a pension or even tapping into some investments. But most people, their biggest investment, their biggest piece of value is in their home. And I always kind of joke, whether we all did it by accident or because we were geniuses, if you've owned a home for the last 10 or 15 years, you've done really well in real estate. Unfortunately, like that slide earlier in the presentation, that money's just not liquid. It's just hard to get at. And so this program is designed specifically for those who maybe can't afford a payment or just don't want a payment, but still need to maybe access some of those funds. And again, they do it without risking their home, putting it into a position where if they can't make a payment, they're putting the home at a foreclosure risk, but retaining all the flexibility of how to tap into those funds. And also flexibility with the home itself. They can sell it, they can will it to their family, they can refinance this loan out into something else if they ever wanted to. So it doesn't lock them into anything. It just gives them a lot of flexibility through a period of time where cash flow or needed cash might be important.
Larry, thank you for joining us today. And Kirk, thank you very much for the information. And and the helpful tips. What I have a question for you, either one of you or both of you, can you share some insight for our viewers as to what they should look out for, or what qualifies as a good thought, a good reason to get into this, and a good company? Because our monthly education speaker series is formatted to provide information to our viewers to know maybe hazards or some red flags or those kind of things, because we want to bring education to them on the industry as a whole. So can you provide some information along those lines? As you know what I'm asking?
Yeah, and I'll jump in here and tell me if this kind of answers the question, Laurel. But the things that I think can be looked for as you guys are out in the marketplace talking to seniors is really just some basics on what their needs are. We all know that it's very expensive to live right now, not just normal times, but now we've got some inflation issues that a lot of people are dealing with, and frankly, incomes are just not keeping up, especially for those on fixed income or Social Security. There was a big bump this year, but it's still not a lot of dollars in people's pockets. So I tell folks in your industry up here in the Portland market, as you're out talking to clients, it really becomes a little bit of a financial conversation as well, because one of the questions they're going to ask for any kind of in-home care situation is, what does it cost? And how are we going to fund that? One of the things that we don't want to do necessarily is start drawing down on investment funds or some kind of an investment portfolio faster than they had planned for. And we also work with a lot of financial planners in this situation because, again, if a financial planner has drawn a map for them financially for the next, 10 or 12 years, and we have to start tapping into that sooner than they had planned, it can just throw off their ability to live comfortably for that period of time. Whereas if we can supplement that with some tax-free income through the reverse mortgage program, we can help them preserve those retirement funds, not draw them down quite as quickly, and use this tool to supplement that and to do some things that might be necessary, like Kirk mentioned, in-home care. It could be, I've had clients that have had to remodel bathrooms just to make them more accessible. We've had clients sell two-story homes to move into single-family homes, or single-level homes, so that they can more easily access bedrooms and bathrooms, those kinds of things. So again, as you're out talking to folks, any of those things that pop up that would indicate a quicker drawdown or a lack of funds to do some of the things they need to do in their senior years is where we can potentially step in and offer a solution. And here's the other thing I'll tell you, and then maybe Kirk has some information as well, but we can run scenarios very, very easily. So if we know the age of the clients, maybe a little estimate of what their house is worth, and also if they have a mortgage or not, we can run scenarios very, very easily and give you guys an idea of what we might be able to offer. No cost, obviously, to do that, but it might be a way to also get some information in your hands that would make a little more sense under a real scenario situation versus just making up some scenarios along the way. Kirk, do you have anything to add to that?
Well,
Laurel, did that answer your question?
Yeah, certainly. Yeah, it's very quick to be able to look at multiple scenarios. We didn't get into a whole lot of details on the different programs that are available, but there are several that we can look at, adjustable or fixed. Most people do the adjustable because it does give them the line of credit. And certainly when you're out visiting with those clients, you're going to see if there's deferred maintenance, or there's things, you'll know your clients. You'll know when they're in need, maybe that their income is not keeping up with their needs and they're going to need some help in paying for your services. They're already maybe struggling a bit in terms of what they're doing, and this would be a great opportunity to be able to not only pay for your services, but make their life around them now just a little bit more comfortable.
Last thing I will say, everybody, is don't be afraid of this product. There are a lot of misunderstandings about how the reverse mortgage program works. But I will tell you, I've been doing this for 11 years and I love it. I love what we can do for our clients. So don't be afraid of it. If you bring it up and someone has some maybe pushback, that's totally understandable based on maybe old information, but in its current market, in its current setup and guidelines and flexibilities, it's a phenomenal product. If it wasn't, I wouldn't do it. So I really just encourage everybody to keep an open mind and yeah, bring it up as an option. And let us maybe put a little bit of information together for you or put us in touch with the client to go over some potential options. We would never lead somebody down a path that didn't make sense, but there are a lot of people out there that can benefit from this program.
Thank you, Larry. And that segues into another question of mine. Because of the bad rap that reverse mortgages had back in the day, and there were a lot of bad players in today's market, is anybody who's in reverse mortgages okay to deal with? Or are there red flags somewhere out there that people should steer away from? And, you know, just like I guess in any industry, you're going to have some bad players.
Yeah. You know, Laurel, I would say this, it's a pretty small group of us out here that are working with this loan exclusively. There are a lot of companies who say they do it, and maybe they do, but it's not their focus like it is for us. So I don't know that there's bad players out there. I'm not going to go that route, but I will say this, if someone doesn't work with this product all the time, every day, they can mess it up, so to speak. And so I would just say this, if anybody out there is ever looking for some information on reverse mortgage, obviously we'd be happy to help. But if you have another contact in this industry, the one question I would ask them is this all they do? Is this where their focus is? Or do they do a lot of other things? And this is just something that they maybe can do. Here's my little comparison to answer that question a little more, Laurel. It'd be like asking a plumber to come to your house to fix the sink. And then before he leaves, you say, hey, can you also switch out this electrical switch? Even though he's a contractor, that's not his area of expertise. So even though someone's in the mortgage business, doesn't mean that they understand this product specifically. So just make sure that you deal with someone who works with this product a lot, knows how it works, and knows the ins and outs of it.
Yeah, and if I could just add a little bit onto that, I know you certainly don't follow the mortgage market like we do, but with interest rates going up, there are a lot fewer people doing refinances on their forward mortgages. And so loan officers out there that made their living on refinances sometimes now are looking for another market. And that's where you're going to find those people, just like Larry said. Is this something that we do exclusively, or is it something that you're kind of adding to the mix now that a previous market that you worked in is not what it used to be? So you may find people out there now, other loan officers, certainly reputable people, but again, this has become a secondary thing for them, not the primary focus like we have.
Right.
Thank you both. That I think that's valuable information, and it helps people to know a direction to go. So I thank you. I think those are great tips. Are there any other questions? Seth, have you seen any in the chat at all? No, it doesn't look like there's any more in the chat. So
No.
No, there's nothing else in there.
okay, thank you very much. The Aznaha Board of Directors want to thank you all for participating today. And our February session will be held on Wednesday, February 15th. And as luck would have it, sometimes life happens. And our speaker for February 15th had to cancel. I just got word of this 2 days ago. So watch for our emails announcing next month's speaker and what that presentation might entail. And again, thank you very much for joining us, and make sure you RSVP for the next month's meeting. Thank you and welcome to the new year, and everyone have a great afternoon.
Thank you very much.